Good morning, everyone. My name is Josephine Kukwalo, a senior manager in the tax unit at KPMG in Ghana, and I'm going to be your moderator for today's session. It is my pleasure to warmly welcome you all to the second edition of the Future Ready Insurance Series, which is an initiative organized by KPMG and the Ghana Insurers Association. The series are designed to equip stakeholders in the insurance industry with the insights and tools necessary to enhance operational efficiency and effectiveness. In our last session, we talked about transfer pricing for insurance, where we discussed why transfer pricing is essential, the approved methods of transfer pricing documentation, and the insurance sector overview. In today's session, we will focus on a very important topic to the insurance industry, which is understanding VAT on non-life insurance policies. We will explore this latest development in Ghana's VAT administration and the implications to the insurance sector. But before we begin the session, please take note of the following housekeeping rules. We will have a Q&A session at the end of the panel discussion. When it's time, kindly raise your hand and you will be prompted to unmute. Also, as the session progresses, please feel free to drop your questions in the chat box. They will be attended to accordingly. As you may be aware, this is a collaboration between KPMG and the Ghana Insurers Association. And so before we continue, kindly join me in welcoming Madam Eunice Maushigaba of the Ghana Insurers Association to give us the welcome address. Madam Eunice, if you can hear me, please take over.
Hello, good morning, Josephine, and good morning to all participants.
Good morning.
On behalf of the leadership of Ghana Insurers Association and on behalf of my boss, Dr. Coberson, who wanted to be here but has been taken for another important schedule, I stand in here to welcome all participants to this webinar, the Future Ready Insurance Series 2. As you all know, Winston Churchill once said, to improve is to change. To be perfect is to change often. And this is the new kid on the block for us as an industry. So far as VAT on non-life insurance products, some of the products are concerned. So please, we urge all and sundry to be very attentive. And it is our prayer that by the time we're done with this webinar, we'll have the full benefits and we'll be able to do what is required of us from the GRA. On this note, I'll please want to hand over to Madam Josephine for us to proceed. You're all welcome. Thank you very much.
Thank you, Madam Eunice, for the opening remarks. In today's session, as I mentioned earlier, we will seek to provide some insights into VAT on non-life insurance policies, and it's going to be through a panel discussion. We are privileged to be holding this discussion with tax experts in this field from KPMG and the Ghana Revenue Authority. With over 15 years of professional experience, our first panelist brings a wealth of expertise in delivering tax and regulatory services to both local and multinational companies across diverse sectors. His proficiency goes beyond compliance, encompassing corporate tax, value-added tax, employment tax, advisory services, and tax audit reviews. He is a proud member of the Institute of Chartered Accountants Ghana and the Chartered Institute of Taxation, and also a lawyer. He's currently serving as an associate director in the tax unit at KPMG in Ghana. Ladies and gentlemen, please join me welcome Mr. John Hwago to today's panel discussion. Please use your reaction buttons to help me welcome him.
Thank you, Josephine.
Thank you. Our second panelist is Mr. Pius Dogli. Pius began his career in public service as a budget officer with the Ministry of Finance. He later joined the Value-Added Tax Service, which has since been integrated into the Ghana Revenue Authority as an operations officer. He has served in various capacities in tax audit, supervisor of taxpayers' services and compliance. He is currently Chief Revenue Officer and Sector Manager for Financial Services at the Large Taxpayers Office. Pius holds a bachelor's degree in economics, a master's in business administration, and MSc in accounting and finance. He has also attended professional trainings in Ghana and abroad. Pius facilitated several seminars and workshops presenting amendments to VAT and income tax laws for professional bodies and trade associations. He and his colleagues recently completed a draft practice note on the VAT for non-life insurance, and so you should be looking out for that. It will be coming out soon. Please join me welcome Mr. Pius Dogui. Please use your virtual applause to join me welcome him. Thank you very much.
Thank you, Josephine.
Yes, thank you. Gentlemen, you are both welcome to today's discussion.
Thank you.
So to set the tone for the discussion, I would like us to start off by asking both of you to share insights into the background of VAT on non-life insurance premiums in Ghana and how this law has evolved over time. Pius, you can start us off.
Okay, thank you. VAT on non-life insurance is not a new thing. Right from 2023, an amendment was passed to the VAT Act, introducing the VAT on non-life insurance. In 2024, it was not implemented because of the political climate. In 2025, the government intended to expand the tax base and also bring on board all services into the tax net. So the implementation of VAT on non-life insurance was initiated with stakeholder engagements. Eventually, it was agreed that an amendment should be made to the earlier law, taking out motor insurance. So even though motor insurance is a non-life insurance, it was exempted from VAT, where all other services which are non-life are taxable under VAT. So life insurance and motor are excluded. So that's just a brief on the background.
Thank you very much, Mr. Pius, for that insightful background provided. John, would like you to weigh in on this as well.
All right. Thank you, Pius. So if you look at it, this idea of putting VAT on life or on non-life insurance is something that was intended way back in 2013. So if you look at 2013, when they passed the VAT, the current law that we are using, the exemptions, they did not include non-life in the exemptions. So you said the exemptions they put there was only life and reinsurance. So way back in 2013, that idea, that conception was there. However, it was not implemented. Of course, you know, around that time, the back and forth between the politics, that it was a nuisance tax issue. So they had to put a hold on it, and it was not implemented. Like until 2023, like my colleague Pius said, when the government was looking at increasing the tax nets and thinking that all people are providing services and they must also charge VAT. That is when they brought this VAT on life insurance back into the tax base. So if you are looking at the background, then this is the background to the VAT on non-life insurance. Thank you.
Thank you all for providing that insightful background on the VAT on non-life insurance. So with a strong foundation set out for our discussion, let's dive a bit deeper into this. So Pius, could you share which specific areas within the non-life insurance that are currently affected or expected to be impacted by the VAT changes? And how does this impact customers of the non-life insurance in Ghana?
Yes, the areas that the VAT is covering is agreed with the stakeholders of the industry. And basically, we are going to charge VAT on all liability policies. We will also charge VAT on engineering policies, marine policies, fire and burglary, and property insurance, and other miscellaneous non-life insurance like travel insurance policy. And this is going to impact both the company that are going to charge the VAT as well as their clients, I mean the general populace. The companies must now adjust their systems to accommodate the charging of the tax. They must engage their IT support people to configure their systems, and they must also convince their clients to pay the VAT on the policy that they are selling to them. And for the clients, due to the low penetration of insurance in Ghana, anything that will increase their policy fee will serve as deterrence or a kind of a drawback for them. So they are going to pay a little bit more for what they've been buying earlier, because the tax will be charged on the premium that they'll be paying for their non-life product. It will mean that they are going to pay the levy, they're going to pay VAT as well on the policy premiums. Thank you.
Thank you, Pius, for that insight. It means that when it comes to non-life VAT or non-life insurance premiums, once it is not motor vehicle, any other thing is going to be VATable. Yes. Thank you. Thank you for providing that insight. So John, can you share your thoughts on how the 15% VAT is going to be applied on non-life insurance policy purchased, and highlight some invoicing requirements for us?
Right, thank you. Currently, as you know, we have the levies, which is the National Health Insurance Levy, the Ghana Education Trust Fund Levy, and then the COVID-19 Health Recovery Levy, which are supposed to be imposed on the prices that we charge, which we have been doing. So with this VAT on non-life insurance, it means that the insurance company is supposed to charge the levies, which is the 6% on the premium that they are charging the customer. And then on top, they will also, before they will bring the 15% VAT. So if your in premium is 100 cedis, then you have to bring in 6% of the 100 cedis, which is going to make it 106. Then that becomes the VATable, the value for VAT, or the taxable value. And then the VAT of 15% will apply on this 106, so that you are now going to pay around 115 or 120 cedis for the premium that you are buying. So we may have the invoices that the insurance companies will issue should show the levies, should show the premium plus the levy plus the VAT. We are hoping that as government promise us that they are going to reform the VAT and the levies, they will bring some changes, and that may change maybe charging VAT on levies. But for now, VAT is going to be charged on the levy. Sorry. So that's how the VAT and the levies going to be on the invoices. That's going to the premium plus the levies before the VAT. Thank you. Thank you. Okay, so should I take it again?
Yes, so
That's
please
fine.
take it again. Thank you.
Okay. So what I was saying is that we have the levies, the National Health Insurance Levy, the Ghana Education Trust Fund Levy, and the COVID-19 Health Recovery Levy. So these three levies, as we normally do on other activities, will apply on these non-life insurance premiums. So you have the premium plus the levy, and that will give you the taxable value. And it is on this taxable value that you are going to apply the 15%. So if your premium is 100 cedis, we are going to now apply the levies of 6, that is the 6%. That will give us 106. And that 106 becomes your VATable value. And that figure is what you are going to apply the 15% on. So the invoices that the insurance companies will be issuing, this is how they have to issue the invoice. Now, if they quote the premium to the customer, some may quote it inclusive of the VAT and the levies. It means they now have to work out the VAT and the levies, and the net now become their premium. So that is how the invoice is going to look like. Thank you.
Yes, so I know you mentioned about the VAT reforms, which I know we are all looking forward to. And hopefully the government implements that to make this a bit easier on all of us. I believe we are all keen to understand what constitutes sufficient evidence from a regulatory compliance standpoint. So, Pius, what records and documentation will adequately satisfy a GRA audit requirement when it comes to VAT computation on premiums?
Basically, your sales records are very important. And I know that every insurance company, the 28 we have so far, which are in the non-life business, they are all fully computerized. So they'll be keeping their sales data on their system. And of course, they'll be generating invoices from their system as well. If there's any insurance company which has not yet been given an approval to generate their own VAT invoice from their system, please, I'm encouraging them to apply or reapply for approval to use their own computer-generated invoices. And of course, as we discussed at the stakeholder meetings with both NIC and the insurers as well, we agree that they should buy the hard VAT booklet, at least one or two, which they will keep around to issue to clients that will insist on having a hard copy of the commissioner's invoice. The mere fact that you'll be given an approval to use your own VAT generated from your computer invoice does not stop the clients from asking for the hard copy. It's their right. So yeah, the insurance companies must maintain that booklet and write it for them. Then they will be required to also prepare input schedules in covering all VAT related purchases or expenses. They must keep a schedule, and also claims paid must also be documented very well, because input deduction is allowed on it using the VAT fraction. So basically, those are the basic additions to already existing documentation that they keep, or records that they keep. They have their financials, they have their other records that they submit to the tax authority already. So these are just the additional information that they must now keep. Thank you.
Thank you, Pius. So it means that now, if I receive an invoice from my insurance company, I should look out for, because they don't have the approval, I should look for the self-generated invoice, as well as the VAT booklet invoice as well.
Yes, especially for the corporate clients who will be using that invoice as input deduction for their returns. They will be asking for the hard copy of the VAT invoice. If the company selling the policy now cannot provide them with a letter showing that they have received approval to issue their own computer-generated invoice. Okay.
Thank you very much. That's very enlightening. And I would like us to explore another dimension of this with John. So can a non-life insurance company claim input VAT? And are there specific provisions within the VAT legislation that govern this recovery process? And what about the customers of these non-life insurance companies? Can they recover the VAT as input tax?
All right. Thank you. It looks a lot, but let me try my best. Yes. So the insurance companies who are going to be charging or providing non-life insurance services, for which they are required to be charging VAT, can claim the input VATs. That is the VAT they pay when they buy goods and services. Yes, they can claim. And on all their services or all their purchases that they make, the VAT that they pay on those things, they can claim. And on top of that, where they pay a claim or an insurance claim, the law also requires that they can claim a fraction of that claim as an input VAT, which is, and the fraction in this case is the VAT rate now is 15. So it's 15 over 100. 15 over 100 plus 15. So that is a fraction. So it now becomes 15 over 115 of that insurance claim that is paid is also going to be treated as an input. However, because there is this non-life insurance company is going to be doing other insurance, providing other insurance services like motor, and we are not going to be charging VAT on that. There may be some of these purchases that they do, which they use for all their insurance business, which includes the motor. So in that case, then we will say they are engaged in what we call mixed supply. So if they are engaged in mixed supply, then it means that VAT or that expenditure, which was for all their business, then they now have to look at the fraction to in terms of the proportion, the turnover proportion between the the motor vehicle or those things that they are exempt from VAT versus the non-life insurance, and then use that one to share the VAT that they pay on that service. So what we are saying is that you can claim the VAT. First of all, is that VAT you pay incurred on a service that you use purposely, solely for this non-life insurance business for which you charge VAT? If it's yes, then you can claim. If it is no, but you can say it's for all, including the one that you didn't charge VATs on, then you have to use ratio and proportion to claim. And then on top, if you pay insurance claims to your customers, then you are required to claim a fraction of that insurance claim. And that fraction is 15, currently is 15 over 115. If the law changes, it may change. Now, for the customers who are going to buy this non-life insurance, they too can claim the VAT that they pay on the non-life insurance. If they also use the non-life insurance that they buy to produce vatable supplies, then they can claim. If not, if their activities are exempt from VAT, then it means it will be a cost to them. They cannot claim. As for the individuals who are going to be final consumers, then it's a cost to them. They cannot make any claim for that. So in terms of claim, there are two groups. Those who are going to use it to do palatable supply, they can claim. But those whose activities are exempt, but they go and incur these premiums, they cannot claim the VAT that they pay on the insurance services. So that is how it will look like in terms of claiming the VAT on this non-life insurance. Thank you.
Yeah. Thank you, John. It means that if I'm into financial services, which is exempt, then I would not be able to be claiming this input VAT or non-life insurance premiums. Okay. Pius, would you want to weigh in also on this a bit?
Yes, I just want to add a little to what John has already said. For the input side, every insurance company, as he said, are entitled to take VAT input deduction. But I want to just emphasize that you have to keep a very clear schedule of input VAT that they are incurring. That has to do with, one, the ones that are not attributable to the non-life business of the company. They must keep that record as well. For example, if you engage legal services to handle a motor case, and that law firm issues an invoice to you, charge you VAT, you cannot claim, but it must show in your input schedule as non-deductible input tax. Then the ones that are general, like VAT on electricity incurred for running the operation of the business, that one will be apportioned, as John has already said. Then if you engage a legal service which is directly related to the non-life product business, that one you've claimed fully. The apportionment, as we have already communicated to the insurers, they are supposed to use the proportion of their business of non-life, excluding motor, against other businesses for the prior year. So if you have motor insurance business, which is about 75% of your total business, it means that you'll be claiming only 25% of your mixed supply invoices, which are not directly attributable. That one will be apportioned according to that proportion. Now, at the end of the year, the company will have to do a reconciliation because you are using a prior year ratio for the apportionment. At the end of the year, you must assess yourself again and look at your current year-end proportion, then do the adjustments and reconciliation. If the ratio has changed, it means that you can always do the realignment. If there is more input you need to take, you can take. If there's a lesser one you must take, you will do it in your last return for December, which will come in January. Thank you.
Thank you very much. It would mean that for the insurance company, records keeping will be very key in this era of VAT on non-life insurance premiums. Yes. So we know that the commencement of the application of the VAT on non-life insurance was from 1st July 2025. So Pius, have the insurance company started the application and the filing of the VAT? And if yes, have there been any concerns, and how have you addressed that as the GRA?
Yeah, thank you. We have fully rolled out the implementation effective 1st July this year. The first return came in August for July business, and August also came in September. So we are looking forward to submission of returns again by the last working day of this month, which will be the third submission for the companies. So they are fully complied with the registration for charging the VAT. Each and every company has fully complied with that one. And the issue that is of concern to them now has to do with the invoicing, which we initially GRA promised to give them what we call an e-invoicing system to onboard. But that one has actually stalled or delayed. So we are currently asking them again to reapply to issue their own computer-generated invoice. That's what we are asking them to do now, which they are going to submit new applications all over again. Some submitted earlier, and it was turned down because GRA was reviewed that they must use the e-invoicing system. But the delay came from GRA, and some of them, especially those dealing with the mining companies, were asking for authorization or hard copy VAT invoice, which they must now do manually. I'm happy to say that the issuance of the hard copy will not be as very frequent because non-life business, excluding motor, is not that frequent compared to the motor business, which is almost in thousands in a day. So even though it will be a challenge to issue a manual invoice, they will have to do that until that letter of authorization is given to them to give to their clients. Thank you.
Thank you, Pius. It's still early days, and so we are sure that all of this will be regularized as we go along. Yes. Yes. Thank you. So thanks to you, John. What is the expected long-term impact of the policy on Ghana's insurance sector and the broader economy as a whole from a tax consultant's perspective?
Right. Thank you, Josephine, for that. I would say it's a beautiful question. So the long-term impact is that now this is going to increase for the insurance companies. One, they are also contributing their part to the tax revenue, because our tax revenue to GDP is always a challenge. We say it's low, and we are looking at ways of increasing that number. So this is also a way of the insurance company helping. We are using them as agents to help to increase the tax revenue. However, for the insurance companies, this is an issue of competition for them. I remember last year when we were looking at the 2023 law, somebody said we are waiting. We are waiting for another insurance company to start before we also start charging. Because if we go and charge, ours will look high and our customers will run away. So the issue of competition is there for them because you are now looking at because the thing has increased the price for the consumers of these insurance policies. So for the insurance companies, it's a competition issue. Again, for the insurance companies, there's an administrative cost because they are now going to configure their computer system and their administrative issues, and all this is going to mean that they have to increase costs. So it's a cost issue for the insurance companies, and for those and also in Ghana, and it's not everybody who wants to do insurance. So now that they have heard that the price of insurance is going up, it means the patronage may reduce, and that may affect the profitability of the insurance companies. In terms of the country as a whole, yes, it's going to increase the tax net for the country, and our tax to GDP ratio will go up. So it means that more money is going to come, and that is going to help, and that's a long-term impact for the economy. Now, for those of us who are now going to consume insurance, like I said, it means insurance now become another cost to us. It's going to be high, and that may not encourage us to insure our properties that ordinarily we would like to insure, especially if it is not something that is mandatorily required by law. That if I don't do, maybe I will be punished. Then I'm likely to decide whether to join or not to join. So these are the impact that you are going to see. But for the country as a whole, yes, we are going to increase our tax revenue, and that is going to be helpful to the country. Thank you.
Thank you, John. Hopefully this does not deter the customers of the non-life insurance so that together we can all contribute our quota to the generating revenue for government. This has been a very impactful session, and I know we have gained valuable insights into the VAT implications on non-life insurance premiums. We'll now open the session for questions. And as communicated earlier, if you have any questions, just raise your hands and then you'll be prompted to unmute. Alternatively, you can type your questions in the chat box. In the meantime, kindly spend a few minutes to complete the feedback form that has been shared in the chat, or scan the QR code presented on your screens for the detail. Let's know your thoughts on how you found the session. Thank you. I think there's some questions in the chat, so we'll take those for now. Yes, so I'm just scrolling together questions, and then we can, yes. So there's a question from Shadrach. Shadrach says, claiming for the VAT input for total claims paid by the insurer, must the claims payment invoices necessarily be VAT invoices, or the insurers can pay claims invoices that do not include VAT, but still claim the VAT input? So, Pius, you want to have a go at this?
Yeah. Thank you. The claims do not attract VAT. A claim that is paid by the insurance company to the client is the claim that has been agreed on, and you don't need to issue any VAT invoice. What the law is saying is that you are entitled to an additional input on claims paid. And that can be computed using the VAT fraction of 15 over 115. It's an additional input that you are taking. So if you pay claims of 1 million Ghana cedis in September, work out 1 million times 15 over 115 as input, which you will take out of your output tax charged for the same period. Then take that one. It doesn't mean that you have to issue VAT invoice to your clients when you are paying them claims. No. The committee comprising GRA, NIC, Insurers Association, and other stakeholders came together to agree on the practice note, which was submitted in a draft form to the Commissioner General. So as we speak now, the draft is on his table. He and his team are still looking at it to finalize it and sign it off for us to use it. But everything in that draft, we have communicated it clearly to the insurers and discuss it. And we are still open to engagement on any issue. I've had several direct engagements from the CFOs of the insurance companies seeking clarification on issues, and we have done our best to address them. So if you have any doubt on anything, you can always contact the office LTO, where the sector is currently being managed. And if you want it even in a much more official form, you can write directly to the office and we'll give you a written response on any issue that is of concern to you. So we don't expect any deviation from what you have discussed at the committee level and communicated to all members of the association. So when it comes to the charging, registration, return submission, it's pretty much the same like any other business we know of, whether it's a retailer, wholesaler, distributor, or any service provider like a lawyer or an accounting firm. It's the same, pretty much the same thing that we are doing. So charging it, we are hoping that the VAT will rationalize in the 2026 budget so that the charging will be much more simpler. In its current form, the levy must be applied to the premium, excluding the fire levy, which you have also agreed on already. Excluding the fire levy, you must charge the levy on that premium. Then you apply the 15% VAT on it. Now, when it comes to the input tax deductions, the levy is not deductible as it is now in its current state. But hopefully, when the budget is read and VAT is rationalized, next year, we will not be having that issue of non-deductibility of the levy. It will just be deduction of input tax, VAT and levy all put together as we used to have it before the change came to split the VAT and the levy. Thank you.
Thank you for the response. So we are hoping that we don't have a lot of deviation from what has already been communicated, because, of course, the insurance companies have already started their filings. So there's another question here. What are the implications of this amendment on imported services for non-life insurance, since they are now supplying taxable and not exempt supplies? Will they now pay only the levies as other entities that have taxable supplies? I believe this is going to you again, Pius. And then when you're done, John, you can also weigh in.
Yes, that's right. The payment of the import VAT is really important for those who are not registered for VAT, because that one will stick on them. But if you are registered for VAT and you are submitting returns, it's just an input and output mechanism or issue. So the effect is always zero. So in that case, you are paying only the levy, not the import VAT, because now you are registered to charge VAT.
Thank you. However, if you, like we said about the claims and those things, so it means that if, for example, you are into the vatable insurance and the non-vatable, then the question will be, this imported service that you received, are you not using it for both? So maybe in one line, it is not being used for a taxable service. And another line is being used. So in that case, there's going to be an issue of sharing. Unless maybe you are saying that that service you brought was used entirely for the one that you charge VAT on. Then in that case, then there's no need to charge VAT when you receive that service. But if it was used for all, then there's going to be that issue of a mixed kind of supply or activity there. Then you have to then share before you share, and then you pay some and you will not pay some. So that's how it's going to be. If the service you brought in was used purely to do, for example, motor vehicle insurance, then it means that one you must pay the VAT on it when the service comes, because the VAT is not paid when the service you received is used to do vatable supply. So that's what we need to be mindful about. Right. Thank you.
Thank you for that. And so someone is also seeking a clarification on whether reinsurance premiums paid by non-life insurers are subject to VAT under the current framework. John, you want to take this, and then Pius can come in. So the clarification is on whether reinsurance premiums paid by non-life insurers are subject to VAT under the current framework.
So VAT paid by non-life insurance on non-life insurance premium. You see whether it is can you okay. Yeah, so the law as stands now does not distinguish or exempt reinsurance, non-life insurance from VAT, which means that if a non-life insurance or a company, a reinsurance company is selling a non-life, he must also charge. And that also going to be like an input VAT for the insurance company. Because if you look at the law in the 2013 version, that one they mention life and reinsurance. But in this current law, it doesn't exclude reinsurance and the only exclusion is on motor vehicle. So it means that all other insurance that are non-life, there must be VAT. So the reinsurance people will also have to charge. And then the insurance company will take it as an input VAT.
Yeah. The reinsurance component of the non-life business is taxable, but as I agreed with the members of the association, we are currently not charging VAT on reinsurance for non-life business. As for life business, reinsurance is completely exempt, as John mentioned, under the law. But then the non-life one is an agreement, and it's what we have communicated in the draft guideline for implementation. So it doesn't make it exempt. No, it's taxable. But just for a smooth takeoff and to also make it acceptable now for implementation, there was this give and take kind of discussions that took place, and we agreed that reinsurance for now should not be included in the VAT implementation on non-life insurance, reinsurance. Thank you.
Thank you. So Ebenezer wants to know whether payments to the insurance companies will be subjected to withholding tax. Pius, you can take this for us. I believe he's referring to the premiums.
I think now we know that the withholding is a different matter from VAT. So by the law now, insurance paid to a resident insurance company, there is no withholding tax on it, and that has not changed. So if you are paying insurance premium to your insurance company, a resident insurance company, there is no withholding tax on it. Yeah. So, or I don't know whether the person is asking about the VAT payable on the insurance premium, because currently there is a withholding on VATs from selected companies. So it means that if you, the company who bought the insurance premium, the insurance policy, there's a VAT on it and you are paying, yes, you must charge VAT on, the withholding on the VAT component. That one, yes. But the premium purely called, which is an income for the insurance company, there is no withholding on it if the insurance company is a resident. If it is a non-resident, it's another matter, but if it's a resident, there is no withholding tax on. But there's going to be withholding tax on the VAT component if the buyer is an appointed agent to be charging withholding on the VATs.
Thank you. Pius, would you want to weigh in on this as well? Want to add some thoughts?
Yes, the withholding only applies to the non-resident insurance companies if you do your reinsurance outside. Yeah. That's the only addition.
Thank you. So we have a question here, which I'm going to summarize. So it says, for travel insurance, which is provided to individual clients, we have about a minimum number of 50 clients in a week. Does it mean we have to issue VAT invoice for every one of them? I think this is too much of an administrative work and something must be done soon. Since this is regulatory, I'll direct this to you, Pius.
Oh, yeah, you are right. If you are going to do that number of travel insurance in a week, but these are individuals and they don't really demand the VAT invoice, the hard copy. So as we discussed earlier, you are at liberty to generate your invoice from your system and give to that client, and that will be enough to cover any obligation on your part. You don't need to be writing a hard copy invoice to these individuals unless the company will do a group something and they want the hard copy invoice. That will be an exception. So it's not the norm. So generally, the system generated invoice is enough for such businesses. But property insurance is just once in a year. If I don't know how many people do their property in a month actually, but if you have let's say 1,000 clients doing a property with you, they may not all come in 1 month. They'll be spread across the month, and hopefully if your application to issue your own system generated invoice reaches the GRA, I can assure you that we are going to give you the authorization to give to such difficult clients, in quote, who want to have evidence that you are authorized to issue the VAT invoice. But the booklet is just something you're asking that you put on the side for mainly the corporate clients who are, even some corporate clients are not even asking for the hard copy. No, it's just a few mining companies that are actually insisting on it. The reason being that for them, they want to claim a refund. They are normally claiming refund, so they need a hard copy VAT invoice for the refund. And that issue of writing several booklets in a week may not really arise for those individual travel policies. Thank you.
Yes, so just like Mr. Douglas said, if you get the GRA gives the insurance companies the authority or the power to be doing their system generated invoices, then that solves the problem. It means all these 50 people that you mentioned, it's just a matter of issuing them with the system generated invoices or your system documents, and that will be fine. You don't need to go and do manual writing. So we are hoping that the GRA will give the insurance companies the power to be using their system generated invoices, and that will help address the challenge that you have indicated. Thank you.
Thank you. So Nanasiwa wants to know, in a typical situation where a portion of a risk is seeded offshore due to lack of local capacity, is VAT applicable on that portion of the risk seeded offshore? Please note that NIC would have already given the approval for the offshore payment. Pius, please.
Yes, for those seeded premiums, there's no VAT on them once it's going offshore. VAT is applicable to all the domestic policies that you are selling. Anything that's going offshore, you cannot charge VAT on a non-resident person. Yeah.
Thank you for that. And to you, Mr. Wago, what measures are being considered to mitigate the impact of VAT on non-life insurance premiums and to cushion policyholders from the resulting increase in costs?
Well, thank you. Like we know, I mean, this is a law matter. The law says we should charge, and therefore we must all be charging. And if, as we are in the context of sustainability, it means you must be charging. If you want your business to sustain, you must be charging. Otherwise, the GRA may come and audit, and when GRA comes to audit and you are not charging, then that is going to bring in penalties and interest, and that's going to affect the sustainability of the business. So what we are doing, maybe from KPMG point of view, is that yes, we are organizing some of these trainings to create the awareness, to educate our insurance companies that they need to be aware and let them know what to do. And we also help with the filing of the returns and make sure that they are filing the returns appropriately. And we provide these consultancy services to our clients, all to make sure that they are complying with the law, and that GRA is not going to find them wanting in any way to affect their business. So our focus is to help our non-life insurance companies to comply with the law, and to comply with the law. That's what we are basically involved in to make sure that they are not negatively impacted. Thank you.
Yeah, thank you. As John mentioned, GRA is not going to do anything to actually lower the premiums for clients of insurance companies. The fact is that the tax is going to increase the premiums, but it's all about the way the companies present their package to the client. As John mentioned earlier, you can do what we call inclusive pricing. NIC has a pricing mechanism for pricing products. Once you've done your pricing, you've worked your levy and your VAT, you can put all together with the premium and present to the client, look, this property, we are going to take premium of, say, 100,000 for it. But when you are presenting the invoice will show the breakdown of the net value, the levy, and the VAT. But the amount at the end of the invoice will be the 100,000. And nobody likes going to, say, for example, a restaurant to go and eat. You ask them, oh, how much is this plate of food? They tell you, oh, it's 120. Then they will come to you with an invoice with 120 plus levy and VAT. You will certainly fight back. So it's all about the way it's presented to make it comfortable for the client to buy the policy. No company is going to go out of the NIC pricing framework or guideline. And once the premium is agreed in the industry that this particular product is so much in terms of premium, work out the levy on it, work out the VAT, and present the total to the clients. There's no point in saying that, oh, it's 100,000. However, GRE has introduced levy and VAT on premium for non-life, so I am charging you additional money. Especially if the person is an individual paying from his own pocket, he will certainly walk out and go to another company. But when you present an inclusive pricing, I'm not saying that take that out the VAT. I'm saying do your homework in terms of pricing very well, including the VAT and the levies, then give it to the clients. When you invoice, the client will see the taxes on the included in that amount, and no client will really fight back, just to make it attractive for you to sell the products. Thank you.
Thank you. So Stephen wants to know what input VAT is allowed for non-life insurance policies that are VATable apart from the notional input VAT deductibility from claims payments, which had VAT levied. He wants to know other input VAT that is allowable for non-life insurance policies.
Well, I think we earlier indicated that apart from that notional fraction, which is the 15/115 of the insurance claim that you are going to take, if you incur any other VAT on the purchases that you do, they are still claimable. So you can claim, except that if it is the VAT you paid is on a service or a purchase solely for, let's say, motor vehicles, then that one you cannot claim. If the VAT is for the general, it's for all of them, then you are going to claim a fraction. So, for example, if you pay rent, your office rent, you pay your office rent, and they charge you VAT on that office rent. This rent is you are going to use it for both your maybe your fire insurance and your motor insurance. So in that case, the VAT you pay on this rent, you are going to share between fire and motor. And the one on the fire is what you will claim, but the one on motor, you will not claim. So that's how it's going to be. But then, like my colleague Spire said, if you go and engage a lawyer purely because of a fire problem and they charge you VAT, that VAT you can claim, because on fire, the VAT that you yourself you also charge on fire, you yourself you charge VAT on fire, is a VATable item, so you can claim that. So that is it. So VAT incurred on purchases purely for the non-motor vehicle is claimable. If it is non-life plus motor vehicle, for example, then you share. So that's how it's going to be. Then on top, that 15/115 will also be claimed. So the 15/115 is like an additional VAT input that you are claiming.
Thank you. So Kofi wants to know if there are plans to refine the current legislation or issue further administrative guidelines to address existing ambiguities with VAT on non-life insurance. So I will direct this to Pius.
Please, can you repeat the question again?
Yes. So are there plans to refine the current legislation or issue further administrative guidelines to address existing ambiguities with VAT on non-life insurance?
Yeah, as mentioned earlier, efforts are already ongoing to reform the current state of the VAT and the levies. And we are hoping that in next year's budget, that will be addressed so that we will not have VAT on the levy. It will just be one composite tax. If it's, say, for 70.5%, it will be computed straightforward without adding the levy first before the VAT. So plans are already in place. The minister is working on that aspect. So hopefully that should be rationalized and we will not have issue of working VAT and levies separately, just to make it convenient for the companies to charge the tax.
Thank you. So Shadrach wants to know if payments on claims, so his question is that payments on claims is not about issuing VAT invoice to the claimant, but rather the invoices submitted to claimants to be paid. Whether those invoices submitted by the claimants to be paid by the insurer, should the invoices to be paid by the insurance company be VAT invoice before the insurer can claim the VAT input?
Certainly no. The claimants are not required to submit VAT invoice at all. It's a claim that they are making. And whatever we agreed amount between the company and that claimant, and that is paid, we are saying that compile all your claims for the month which you have paid, then take the VAT fraction of that amount. So you don't expect any VAT invoice from any client when they are making claims. No, there's no VAT invoice at all applicable in that case. Thank you.
Okay. All right, so Nana Sewa wants to know about co-insurance. Is every co-insurer expected to charge and file their own levies and taxes? If so, what does a member do when the lead insurer insists on charging and filing the 100% on behalf of all of the participating insurers? Again, I would want Pius to have a go.
Yes, for convenience and ease of accounting, we are saying that you have to issue VAT among yourselves. So one will receive it, it will be an input tax to that person, it will be an output tax to the other. So the lead can go ahead and issue one VAT invoice to the client and charge VAT. Now, if that lead is having a co-insurance arrangement for that particular business, the lead will also issue to the the co-insurer, and that will serve as an outflow from the lead person, and the amount that is given out to the co-insurer will be taken out as a deductible input for the lead. It's just for purpose of accounting. You receive 100,000 plus, say, 50% VAT. you are giving half out. The half you are giving, let the recipient or the co-insurer give you an invoice for it. So that half of the VAT will be given to you, which you will take as an input tax as the lead. So you are not actually paying the 100% to GRA. You have the, even though you have the 100% VAT on the initial invoice, the invoice you are getting from your co-insurer will be reducing the output VAT by half. So just for ease of accounting.
Yeah. So like Bayo said, I mean, it's an accounting issue.
Yeah.
So the co-insurer, I mean, so let's say you are insuring somebody worth 100, and your portion, you are supposed to take care of, say, 60 of it. So you will charge VAT on this 60, but you are not giving the invoice to the client. So you pass this one to the lead insurer. So that's going to be an input VAT for the lead insurer, and it's going to be like an output VAT for you. Now, when the lead insurer receives, he is going to invoice the client VAT on the 100. But because you also sent him an invoice on the 60 or VAT on the 60, he is going to claim the VAT on the 60 against the VAT on the 100. So if you look at it as a whole, what is going to GRA is going to be the same figure as a whole. But for the administrative accounting purposes, like he said, they have agreed with the insurance people to do it this way to make it a bit easy for everyone to follow. So the co-insurer, you to charge VAT on the portion that has been assigned to you to the lead insurer, and the lead insurer will charge it to the client.
Thank you for the responses. For the sake of time, we'll just take one final question. Amy wants to know what penalties or compliance risks do insurers face for failing to implement the VAT systems. John, you can take this first.
I mean, in terms of penalties and interest, they are the same as applicable to any taxpayer and any of the taxes that you have already been paying, So it's a VAT, and we know that when you don't file your VAT return, you pay penalty, which is 500 cedis instantly plus 10 cedis per day that you don't file. And then if there's a VAT that you must pay and you don't pay, then currently the regime is that you are charged interest compounded monthly using 125% of the Bank of Ghana monetary policy rate for the period of the default. So in terms of penalties and interest, they are the same as we have been applying on the various taxes that we have been dealing with. So it's not different. It's the same penalty and interest regime that will apply in this case.
Thank you. Thank you very much for all the responses and to all our participants for the questions that you brought in. This is all that time will permit us to take. All your questions in the chat box that were not answered will be responded to in the chat box. I want to say a big thank you to our panel for such an insightful and engaging session. We are grateful for your perspectives and the knowledge you've shared. So at this point, I would like to invite the head of tax at KPMG in Ghana, Mr. Kofi Frimpong Koye, to share some thoughts on our discussions so far. Please help me, join me, welcome him. And KFK, please, if you can hear me, the floor is yours. Hi, KFK, can you hear me?
Okay. Sorry, I was muted, so I was waiting for you guys to unmute me.
Oh, apologies.
Okay,
Yes.
that's fine.
Yes.
So thank you, Pius, thank you, Mr. Wago, and thank you, Josephine, for the time we have had with you guys today. And thank you, Ghana Insurance Association, also for such a lovely morning. Look, we've had quite education this morning. At a point, it might look complex, but that's why we are here, to cut through the complexity in partnership with all of us that are on this call this morning. So GRA is here, my colleague John is there, and then JIA is also here to ensure that whatever complexity that is involved in this VAT for non-life insurance is made easier for everybody as we speak this morning. So what will I say? I mean, listening to Pius and listening to John, it is clear that the VAT has been with us. It just so much happened that implementation delayed. And then given the perspective of the new government, it has come such that we all start to learn about it and also to implement it. I believe that regardless of whichever way that we look at it, even though we are aware also that the VAT in itself is being relooked. Generally, the whole VAT and the levies itself is being relooked at by the government and the Minister of Finance. Whatever outcome that comes, we should expect probably in the coming budget, and hopefully by next year, we should be coming back to see what has happened to it. But my belief is that it's come to stay, and we need to get through this complexity. The education that we need to take out from today, based on what we have heard from our colleagues, for all of us is to ensure that at least our data is correct. So it's about documentation. And Pius was clear in indicating to us that we need to have our input schedules readily available. So colleagues from the insurance fraternity, we need to start compiling all our claims, compiling all our VAT inputs, and then also ensuring that we also get copies of the booklet, because Pius indicated to us that there are some people who will insist on getting the manual books. So it's also prevalent upon us to ensure that we are issuing it to those who request for it. However, we also need to be sure that we get permission from the GRA to issue our own system-generated invoices. And I believe that will make it easier for all of us to ensure that we are compliant. Like I said, we need to also have continuous engagement with the GRA. Going through the chat box, you could see that there are several questions. There are several clarities that a number of us need to. So for the management of the GIA, for the bosses, my boss, Kingsley and co, what I will also advise that we need to have continuous engagement with the GRA to clarify a number of the issues that are coming up. Some of the terminologies and things that we are issuing, maybe the regulator might not have thought through, but that is where dialoguing will ensure that we are all compliant and we are all also abreast with whatever way that we need to do. So one takeaway from this conversation from my end is to ensure that we continue to engage the Revenue Authority, we continue to engage the regulators to ensure that we are clear on where and how we need to be as far as this issue of VAT is concerned. Like I said, bookkeeping and keeping records is very critical. So we all need to ensure that we are keeping our records accurately and on timely basis. So if you have not been keeping our records, this is the time to start. Let's create a dedicated schedule offices or system to ensure that all our records are clearly up to date, to ensure that we are compiling whatever that it is. And let me indicate that Pius is here, but that's what the reality is. GRA might not come today, even though we said we have started fully by July 2025. GRA might come to you probably in 2028, 3 years down the line, where maybe we might have forgotten some of these issues, because that, looking at the trend of tax audits, that's what I see. It's usually in a 2-year cycle or in a 3-year cycle. So record keeping becomes very, very important and very prevalent in this situation, so that we keep all the records, so that when they come in, whether it's a 2-year cycle or a 3-year cycle, we are able to provide the needed data to show. But of course, we as service providers, the VAT that we are charging are not for us. They are also for the client, for the government. So it means that we also need to be filing regularly, in time and on time, to ensure that we are accounting for the collections of the VAT to the government. So filing regularly and on time is also very important for me from the discussion that we have had today. Then, of course, we also getting input claims. There's been, we've spoken about misfilings, VAT fractions, and all other things, claim schedules that we all need to be abreast and conversant with. So I believe that we have had quite a lovely discussion. There are more that are still yet to be clarified and then also unpacked. And that's why I would say that, look, we as KPMG are also here to support all of us on this call to continue to be able to cut through whatever challenges and issues that we have as far as this VAT on non-life is concerned. So we are available to support, we are available to guide, and we will continue to be in partnership with the Insurance Association to ensure that all of us on this call today are complying. It's about compliance. It's also all of us also ensuring that the government get the needed revenue to advance the economy for all of us. So thank you, and all being part of it. I'll leave it to Josephine to pick it up from there. Thank you very much.
Thank you very much, KFK, for those valuable thoughts shared. So we must all ensure that we keep our records and keep them accurately in this era. Thank you. We would like to remind you all to kindly spend a few minutes to complete the feedback form that has been shared in the chat, or alternatively, you can scan the QR code that has been presented on the screens for the details. So right about now, we'd like to invite Madam Eunice back again to give us the closing remarks for today. Madam Eunice, if you can hear me, kindly take over.
Thank you very much, Madam Josephine. Indeed, this has really been insightful. And some few takeaways, I think your boss has already said it all, but for the sake of our members and for our benefits, there are some few things that we still have to take note of as insurers. Although we realize that this is going to increase our costs, we've also been admonished to make it an inclusive pricing. We should use that approach, which is or must be in line with our regulators' pricing thresholds. As members, we are encouraged to comply with the VAT laws. Also, for easy accountability in the case of co-insurance, the onus or the burden of VAT filing is on the shoulders of the lead insurer. We should also not lose sight of the following: trying to keep hard copy of the VAT invoice booklet for corporate clients that want to or that will need it for their returns. We are also to ensure that we keep proper records for our inputs, for schedules, as well as claims paid. On this note, on behalf of our leadership and on behalf of my CEO, Dr. Cobertson, would like to thank KPMG for this collaboration. And with this, I hope that in the future, we'll do more of this to ensure that we stay in line as insurers and as we discharge our responsibility and duties to governments, to be specific, the GRA. Thank you very much.
Thank you. Thank you, Madam Eunice, for giving us those remarks from the association perspective. Ladies and gentlemen, all too soon, we have come to the end of another edition of the Future Ready Insurance series. we would like to use this opportunity to share our gratitude to the GIA, Dr. Kwabasin and his team for their support always. Appreciation also goes to our panelists for this insightful discussion, and to you all, our participants, for your time and active engagement. It is our hope that the discussions today have enhanced your understanding on the non-life insurance VAT and provided you practical insights for compliance and risk management within the insurance industry. So currently on your screen, you will see our contact details. Please reach out to us with any questions or further assistance you may require. Thank you once again for joining us, and we wish you a productive and successful rest of the week. Goodbye for now.